Welcome to the deep dive. We're digging into an analysis from StockTelescope.com today. Huge thanks to them for the detailed look. Yeah, our focus is Uber Technologies, Inc. The ticker is UBER. Our goal here, just to break down Stock Telescope's findings, get you up to speed fast on what they see happening with Uber. But first, really important, this is all for educational and informational purposes only. Definitely not investment advice. Please do your own homework, talk to licensed financial advisors before making any investment decisions. Okay, and hey, if you like getting smart quickly on these things, definitely hit subscribe so you don't miss our next deep dive. All right, let's get into it. Stock Telescope kicks things off by saying Uber isn't just, the taxi app anymore. They frame it as a really compelling investment now, a company that's genuinely changed. They talk about this shifts, like from a cash-burning disruptor to being profitable and cash-generative. So what's really behind that? What's the core of this turnaround?
Well, it's the financials, really. That's what's so striking. I mean, think back just 4 years ago, they were posting these huge losses. But fast forward to Q1 2025, they pulled in $1.87 billion in Adjusted EBITDA.
Okay, Adjusted EBITDA, that's earnings before interest, taxes, depreciation, amortization, right?
Yeah.
Kind of the core operational health.
Exactly. And that number, it's up 35% from the year before.
Wow.
And even more impressive, maybe, is the free cash flow. $2.25 billion just in that one quarter.
That's serious cash generation.
It really is. And it shows, the scalability everyone talked about is actually happening. That operational leverage is picking up speed.
Right, so they're making more profit on each extra dollar of revenue as they grow. Costs aren't scaling up as fast.
Precisely.
Okay, so the financials paint a pretty rosy picture now. But it's not just about the money, right? Stock Telescope mentions their market position, talks about dominant market positions, network effects, like 76% market share in U.S. ride-sharing. That's huge.
It's massive. And that dominance feeds itself. That's the network effect. And look at Uber Eats. It's not just restaurants anymore. They're pushing hard into grocery, retail.
And hitting a $10 billion annual run rate already. So projecting $10 billion in revenue for the year if things keep going like this.
That's the trajectory, yeah. And Stock Telescope points out this whole platform advantage that drivers, the riders, the eaters, the merchants it builds, pretty significant barriers, makes it tough for competitors.
So how does that work exactly? The sheer scale?
Yeah, it's the scale. 170 million monthly active users across the platform, over 3 billion trips in Q1 alone. That creates incredible density. It means better demand prediction, better pricing, shorter wait times for riders, more tricks for drivers, things competitors just struggle to match.
Okay, that makes sense. It becomes a self-reinforcing cycle.
Absolutely. And thinking about the future, the analysis really highlights their strategy with autonomous vehicles, AVs.
Right, but they're not building the cars themselves.
No, exactly. They're partnering up. Think Waymo, think Volkswagen. Let them handle the complex manufacturing and R&D. Uber wants to be the network, the platform where these AVs operate.
Smart. Leverage their existing strengths.
Right. And the CEO, Dara Khosrowshahi, he's apparently called AVs the single greatest opportunity ahead for Uber, talking about a potential market worth over $1 trillion.
$1 trillion? Wow.
And the analysis suggests this could improve margins by like 5 to 10 percentage points in dense city markets, mainly by reducing driver costs over time.
Okay, 5 to 10 points is significant. Does the report mention timelines or the investment needed from Uber's side for these partnerships? Or is this more long-term vision?
It's definitely framed as a strategic long-term play. Gradual integration, not an overnight switch. It doesn't really drill down into specific immediate capital needs for these partnerships, probably because the whole point is leveraging other companies' tech.
Right, avoids that huge R&D spend for Uber itself.
Exactly. It reduces their immediate financial burden while keeping them positioned for that potentially massive upside down the road.
Okay, so putting it all together. The financial turnaround, the market dominance, the growth drivers like Eats and advertising, and this big AV potential. What does Stock Telescope conclude about Uber's valuation for investors?
Well, despite the stock running up quite a bit, they actually find the valuation attractive. It's trading at about 14.73 times trailing PE price relative to last year's earnings.
Which they see as reasonable for a tech leader growing EBITDA at 35%.
Yeah, that's their take. Reasonable for that kind of growth profile. So they've landed on a strong buy recommendation.
Okay, and a price target.
They're looking at a range of $105 to $120 over the next 12 to 18 months.
Which implies, what, 26% to 44% potential upside from where it might be trading now?
Something like that, yeah. Based on that market leadership, the financial strength, those growth avenues like advertising hitting over $1.5 billion annually and growing fast.
Over 60% growth on advertising, that's another strong point.
It is. And of course, that long-term AV opportunity we just discussed, it all feeds into that positive outlook.
So wrapping this up, reflecting on this deep dive,
Yeah.
what really stands out to you about Uber's story here? It does seem like a classic case of a disruptor, maturing, adapting, and finding a path to thrive.
I think what's key is how the narrative has shifted. It's not just Uber, the taxi alternative anymore. It's become this comprehensive platform for moving people and things, and it's very strategically positioning itself for the next big shift with autonomy. Maybe the provocative thought to leave you with is, how might Uber's specific approach to integrating AVs rather than building them actually change our cities, our daily routines, and how soon could we really start feeling those changes?
That's a great question to ponder. How deep will that integration go, and how fast? Really fascinating. And a perfect note to end on. If you found this breakdown valuable and you want to keep getting insights like this quickly, please do hit that subscribe button. Thanks so much for joining us for this deep dive.